Hi friends, my name is Partha. Welcome to my channel Nifty Trials. It's a place where you get daily Nifty and Nifty stock analysis using a 3D method. So let's start with today's analysis for the market that ended on 27th of July 2020. Before we move forward, let me share the disclaimer. Contents of this video. Just like yesterday, we will be doing a first roundup on global financial market analysis, and then we'll follow up that with Nifty analysis on three dimensions: price, volume using VWAP and VMA indicators. We will use option chain analysis, and we will use market participant position analysis, and we will use delivery position analysis as well. So in all these dimensions, we will analyze Nifty and we will come to a conclusion what's the best way and wisest way to approach this market. Moving forward, let me share a screen with you where I am comparing Nifty and S&P 500 to start with. So this is on the left side, what you see is Nifty 500, S&P 500 futures hourly chart. Let us first zoom out onto a daily chart. And this is the same chart which we've discussed yesterday, where a channel has formed. There is a rising channel at the end, and currently the S&P 500 is around this rising channel. Now zooming in a bit into 4 hours. So if you see on the 4 hours channel, this ch channel where we formed, it has been shrinking. And the important observation is yesterday where we left at that time, the number was somewhere around this, I would say, somewhere around 30 to 30, or I believe. So what happened in APAC and European time zone and now in US is there has been a dip. That dip is right into the support which I've highlighted in the circle, and then that has been bought for now. So this is a 4 hour chart that I'm showing. The important observation here is there are two back-to-back testing that is happening on this trend line on 4 hours. If you zoom in both further, you will see there is a back-to-back testing that happened yesterday on 26th of July, and now again on 28th of July as well. This is Monday pack, and this is Tuesday America time zone, where there has been dip and that dip is bought into. So the crucial resistance currently is this line, sorry, crucial support. If it breaks, that is 3220 breaks on the closing, we need to be cautious, because that is actually, if it breaks 3220, then it is actually breaking the line which is forming for last 1 month. So that is a bearish signal. If that breaks, then the immediate target is 3194, and again it may consolidate at 3194 to dip further to 3160. So all that to happen, first it has to break 3230 S&P 500. On the bullish side, yes, it has recovered. That's a bullish signal, and it is right at the top end of the entire move last 1 hour. That's a bullish signal, but it has to cross 3239, which has been negated twice, one on 23rd July and another on yesterday MRR. So 3239 to 3246, it has to break 3246 in a convention a bullish way. Then only we can be bullish in this market, else we need to be cautious or sideways. This is from the S&P 500. Now let us see how Nifty is behaving. On the right side, what you see is a daily chart where you see how we formed a wedge pattern, a move up and then a sideways move and then move up, again a sideways move, move up, sideways, again move up, sideways. So that's what we have been doing. That is in tandem with the US markets. However, if you zoom in into 4 hours, what you will notice is, what you will notice here is this congestion zone that we formed here on the one second. This congestion zone, which I'm talking about, this congestion zone, which we have formed, we have broken out of this in a bullish way. We have broken out with confidence, and then we are closing at we closed at the high, and this is the SGX Nifty, which is still looking bullish. So there is nothing to be bearish from the price structure perspective. If you compare these two, we are going up. Now moving forward, let us see the option chain analysis that is done. So this is the option chain analysis that is done. So here you will observe something different than previous videos. That is, there are green highlight markers on the call side as well. The left side is call OI and the right side is put OI. Generally, I mark call OI as red and red, but however, I marked green this time. You might find this interesting. Let me explain. First observation is at 11,200, there has been 19 lakh call writing positions that are closed. I assume these are call writers. I have explained in previous videos why we should assume it as call writers to come to a conclusion rather than call buyers, because call writers are more resourceful, and if we assume they are closing the positions. So 19 lakh, 19.8 lakhs positions that are closed means call writers are bearish. If they are closing their positions means they're being bullish. So 11,200 is damn critical support for this market moving forward. And what another interesting observation is 11,300, even though the market has moved 550 points Sensex and Nifty 170 points, still they are adding call writing positions at 11,300. So my goodness, 11,300 is a good resistance in this market with 30 lakhs OI. If that breaks for some reason tomorrow, then we can even go up to 11,400 to 11,500 as well. At 11,500 again you see call writing positions unwinding, about 2 lakh 17,000 positions that are unwounded. So now the important point from what the call writers are telling us is 11,200 they will defend, 11,300 they are suspectful. Now moving to put side OI, what put writers are suggesting? Put writers are the one who are bullish in this market. My goodness, they have added a lot of put writing positions at every single strike price. 11,000, 11,100, 11,000 they added 9 lakh, 11,100 12 lakh, 11,200 22 lakh, 11,300 13 lakh. My goodness, together they have added a more about 52 lakhs of put writing positions just in a single day. That takes some guts to do it, and I think we will see who has done it in once we move to market position analysis. So what we understand here is put writers have gone aggressively bullish in the market, and call writers till 11,200 they are also giving up and saying, all right, we don't expect the market to fall below 11,200, but 11,300 they are trying to defend, call writers. So what we expect tomorrow is it will be an interesting game at 11,300. Let us see how it goes from there onwards. But largely I would expect a bullish tone which is currently pervasive can continue at least in the first half tomorrow. But tomorrow being Wednesday, a day before a monthly expiry, we can expect volatility tomorrow. So it is either one's game. Looking at the call put OI, there is huge writing positions that are created. Uh, so we need to be a bit, although bullish, but cautious as well. They can reverse if there is a move, because these entire put writing positions will have to face the brunt if the market goes down. So 52 lakh OI positions can go into losses if the market really goes in that direction. So the maximum pain currently is at 11,150. Maximum pain is a place where writers can lose a maximum amount of money. So what is a max pain is there are many videos on max pain analysis. Basically, it means that wherever is the max pain point, market tends to move to that direction. That's the original genesis of the max pain theory. So max pain here is at 11,150. Well, the market is bullish, but max pain is at 11,150. It has moved up from 11,000. So let us see if there will be a reversal towards max pain or this bullish tone to consider. For now, it is anyone's game, but market is slightly bullish. Now moving forward to market participant analysis. This is the Excel proprietary Excel which we create based on the NSE data. So what I've done was, as explained in previous videos, I've taken the data and I applied some pivots and formulae and then come up with certain conclusions. So first we will see the FIA data. What did FIAs do? They have increased their net longs in futures from 1.17 to 1.35, and but their long put to long call ratio there that has decreased, which means they are being bullish in this market, right? Let me go to a summary page to explain it in a quicker way. So FI's net longs increased from 1.17 to 1.35. They are continuing to be bullish. There are no two ways about it. From derivative perspective, FIs are bullish. But from cash market, they bought only 280 crores in cash market on a day when Sensex moved 550 points. Isn't it looking little suspicious? Why did only they bought 280 crores? If FIAs bought only 280 crores in cash market, who are the ones who are buying in the cash market? Are they clients, that is Robinhood investors, or retail participants? Maybe. Maybe the retail participants have gone and bought. Let us see to understand that further. So on DIIs, they have decreased their net longs further from zero point 0.3 to 0.29. My goodness, they are selling locks and barrel in derivatives as well as in cash market. If you see yesterday on 27th July, a DI sold 977 crores. Now today, market increased 550 crores. They are still continuing to sell more than 1000 crores. Hmm, that is raising eyebrows. Why are they selling so heavily in this market? So these are the 2 points which are actually causing little uneasiness for the bullish uh, folks in traders in the market, that I think. And moving forward, if you see clients what that are the retail and HNI, what they have done was they have decreased their net longs on the futures from 1.06 to 0.9. At the same time, they increase their short put ratio as well, and they increase their long put ratio as well. Since long put call option ratio is increased and more than the short put call option to short call ratio, what it means is that they are continuing to be turning out little bearish in the market, but for now we can take them as neutral. So if you see proprietary firms, what they have done was they've increased their longs drastically from 1.33 to 1.68. They have also increased their short put positions compared to net long positions, but still short put positions are more than net long put positions, which means that they are being bullish both on selling short or selling puts as well as increasing their longs in the index futures. So pros that a proprietary firm and FIAs are being bullish. On derivative side, in cash market, DIs are continuing to sell. FIAs are not interested to buy at these prices on cash market. Clients, they are turning little cautious or little bearish in the market. Now moving forward. So we have covered this market from all the three directions. Now let us see the final analysis, final summary. Technically, yes, the market is bullish, no two ways about it. And sorry, and technically, market is bullish, no two ways about it. Option chain analysis suggests that call option writers are active at 11,300. That is a make or break level, but the underlying tone is bullish. Market position analysis suggests that FIs and pros are bullish, and but somehow the cash market buying by FIIs is little suspicious. Only 280 crores on a day when market went up 550 crores. Generally, we see this in the range of 1500 crores a day like this, but it is only 280 crores. Maybe they'll come up tomorrow. Well, let us see. So the important point is, from global perspective, we are at the make or break level on S&P 500 between 3220 and 3245. So if 3220 breaks tomorrow, then in a pack time zone, then we need to be cautious. Avoid new longs. Let us see first the strength in the US market where it closes above 3245 for a couple of days for us to take additional longs. Remember, in the stock market, not losing money is important than making money. Now, I have added an interesting section. So, as you know, there are quite a few YouTube channels who are suggesting many different things, educating people. But in this channel, on one side, I've added uniqueness by covering this market in all the three directions. The another uniqueness of this channel will be going forward a section called progress report. What is this progress report? So every day I analyze and we come to certain conclusions. But how am I judged by the market? How is it good? Am I making profit on the calls that I have taken? Am I making losses? These are for now only to analyze how good is the analysis being done so that I can improve if I'm going wrong somewhere. Apart from that, to show and maintain transparency about my calls. So, what are the rules for this? How am I looking at? First, I consider the about 3 lakhs amount. I assume that 3 lakhs amount is allocated in total, and I distribute the amount equally based on the number of calls that I gave on that day. And if no, every day I give a call in the video. Give a call in the video, and the next day, if at all I expect market is moving in opposite direction, I would give comments on the Telegram channel. So the time at which I give the call is also mentioned so that you can check the charts and cross check whether the amount of the closing price also you can check. The time also I'll mention, and we will calculate hypothetical profit or loss every day and see how we are doing. So if you see last 2 days on 27th July, we have given a sell call cautiously bearish on Axis Bank and ICICI and Bajaj Finance. What I'm assuming is market opens at 9:15. I'm giving a breathing space of 5 minutes. Let market adjust for 5 minutes and then say if at all we take a call based on the analysis that is made at 9:20. So 9:20 is the price that I consider, and how much is the quantity that I consider? Here you see it is 1 lakh divided by the price 443. That gives about 225 stocks. Similarly, every based on the price, we will divide the price to the quantity and we come up with the price to the amount to the quantity amount to the price and we come up with a quantity, and the quantity keeps on changing, but the amount distributed or allocated to a particular call is all will always remain same. It will be total amount allocated 3 lakhs divided by number of calls given. So how we did it was on 27th we had 443 Axis Bank that we can consider we've sold hypothetically, and the call price at 1336 on the channel I suggested to close the book profits. So that price it was 432. So we booked a profit of 2541. Similarly, on ICICI Bank 373 at 9:20 a.m. I've given a call. I've asked to close at 1336. At that time it was 361, about 268 stocks, that is 3267. Similarly, the other call on 27th, Bajaj Finance. Yesterday, I've given a call on three stocks, Maruti, Ultratech, and TCS. And anyone has taken, if I have taken a position at this time, then I would, with the 3 lakhs, I would have closed at 12:30. These are the profits that I make. So on 27th, on 3 lakhs, we made about 8,000 hypothetically. And here on 3 lakhs on 28th market we made 5,000. So first day we made 2.7 percentage, next day we made 1.6 percentage. So for tomorrow, I'm not giving any calls because these are quite good profits. We will sit on them for some time and let us wait and watch. There is no compulsion to trade every day. There is no compulsion to make calls or give calls every day. We trade when there is risk reward that is in favor to us, like today morning. Else, we will keep quiet. There is no rush to make money. Important thing is we don't lose the money which we make. So every day you will be, I'll be sharing. I would not explain this progress report every day in such detail, but this report will be shared, and you can see how I'm progressing. Thank you. Have a nice day. Let's meet tomorrow again.